Morning, everybody. Investors, savvy traders, welcome to the show. I was scrolling through the news feeds and just kind of like a wall of AI. AI is going to cure cancer. AI can write our emails. AI can read your emails. AI can walk your dog. AI can clean your house, probably do your homework. AI can trade for us. I mean, the hype train, we've seen it leave the station, everybody. It's barreling down the tracks at 1,000 miles an hour, fueled by venture capital, optimism, hope. But you know what they don't tell you about all this stuff? They don't tell you the dirty little secret behind all the glossy demos and the TED Talks and the guys in black turtlenecks. They don't tell you that this shiny, futuristic city of tomorrow is all being built on a foundation of debt, a mountain of debt. Everybody talks about, all these hyperscalers, they're using cash flow. Not anymore. We've now surpassed that. It's a classic story, really. Think of it like the California gold rush, the 1800s. Everybody's out there rushing to find the gold. The people, well, the ones that ran the brothels, ran the general store, sold the shovels, sold the food, they kind of made a killing. In our story, the gold is AGI, artificial general intelligence. The shovel sellers, well, right now, big tech hyperscalers, your Google, your Meta, your Oracle, they're building massive data centers, the digital infrastructure that this whole AI revolution is supposed to run on. But here's the twist. These shovel sellers, they're low on cash. They've run out of money. They're spending so much money to build these digital shovels. Talking about trillions of dollars of capital expenditures that their own cash flow can no longer keep up. So what do? They do what any of us would do. We want to buy something we can't afford. Take out a loan. In this case, it's a very, very big loan. In just September and October this year, these AI giants borrowed about $75 billion by creating new bonds. That's more than double their average annual debt issuance for the past decade. Think about that for a minute. In just 2 months, they wrote more debt than their average annual debt issuance over the last decade. Meta, the company that brought you your aunt's political rants on Facebook, just raised $30 billion. Oracle, a database company that's been around since the dinosaurs roamed the earth, raised $18 billion. And they're all lining up at this debt buffet table, piling their plates as high as they can. And for a while, the market just ate this up. Who cares? Who cares? We can handle the debt. You're going to change the world. But then something changed. A little watch out metric that I talked about back in August. Bank of America's Michael Hartnett, he pointed it out first. I highlighted it back in August. This thing just snapped. It's an indication of a problem. The foundation of this AI build-out bubble. I'm going to call it a bubble because that's pretty much what it is. The bond spreads on hyperscaler companies, it has started to widen. Now, for those of you who don't speak Wall Street, what that means is getting money is starting to be more expensive for them to borrow. It's not just the default rate. It's actually being more expensive to borrow and build AI infrastructure. The lenders, people are starting to take a little notice. They're getting a little nervous. Starting to ask, hey, are you sure you're going to find enough of this gold to be able to pay back this loan? Are you sure? Are you sure you got the good property? Are you sure you got the proven reserves? And then this story gets even better. The CFO of OpenAI, the company that created ChatGPT, in case you don't aren't up on current events and know who's who in the world of AI, this is the poster child of the whole AI revolution. The Chat GPT came out first, and it's been a race to the finish, or maybe a race to the bottom ever since. Well, the CFO had a little slip of the tongue. At a conference, she mentioned that maybe, just maybe, they could use a little bit of government backstop to help finance the grand ambitions. A backstop? Wait a minute. That's a bailout, right? In other words, hey, Uncle Sam, can you spot us a few $1 trillion? We promise we will pay you back eventually if you just make sure that the money flow doesn't stop. Of course, they immediately started walking this back. The CEO, Sam Altman, got on Twitter, X, and even went on a couple shows and said, hey, no. We don't want any government handouts here. But guess what? The cat was already out of the bag. The fact is, they don't have the money. They're thinking about it. The fact that they've already talked about it, they already know, they've already got this plan, should tell you everything you need to know. The numbers that they're operating on don't add up. They don't make sense. They're talking about over $1 trillion in infrastructure commitments with revenues that just don't support that. It's kind of like trying to buy a fleet of Lamborghinis on a lawn mowing allowance. And while all this high finance drama is playing out on Wall Street, what's happening on Main Street? Well, things aren't so great. We've seen over 1 million job cuts this year alone. The most since 2020, when the world flipping upside down. The unemployment rate for recent college graduates is over 9%. These are the kids who were promised a bright future if you just borrow a bunch of money and go get that degree. And now they can't find a job, any job. Maybe you got to flip burgers. While the tech billionaires out there are talking about building utopian AI cities on Mars, the housing market is a little bit wobbly. People are worried about affordability, putting food on the table. They're not worried about whether their toaster can have a conversation with the refrigerator and be our AI overlords, right? I mean, that means, my friends, this is the disconnect. This is the sign of the bubble. Even though you don't want to admit it, this is the sign of the AI bubble. So what's an investor do? Do we run for the hills? Do we short everything in sight? Well, as always, it's never going to be that simple. But there's opportunities if you know where to look. First, if you're more sophisticated in this whole realm, you might consider what Michael Hartnett and Bank of America is doing, shorting some of those hyperscaler bonds. It can be a risky play, but if he's right, this debt house of cards starts to wobble. That play can pay off handsomely. For the rest of us, there's better ways to play, safer ways to play. Hartnett suggests long-term zero-coupon bonds as a recession hedge. Think about them as a financial storm shelter. They don't pay you any interest along the way, but they're safe. They'll be worth their full face value when they mature. Can be better than being negative. And then there's the rest of the world. While the U.S. market is obsessed with just a handful of AI stocks, there's opportunities emerging in emerging markets. Countries like India, Brazil, they're all seeing real growth, not AI-fueled insanity. Pickett Asset Management is recommending a diversified approach to these markets. Now, don't forget about good old-fashioned Main Street stocks, the boring companies that actually make things, sell things, provide essential services, the retailers, the small caps, the real estate investment trusts. They've been left in the dust by the AI hype train. But if the economy actually manages to avoid a full-blown meltdown, recession, or depression, these stocks could be a steal at current prices. So as you go about your day, you see another headline about how AI is going to change everything about everything you do. Just remember, story about the gold rush, right? Remember the mountain of debt. Remember that while the gold rush may be exciting, a lot of people are going to get hurt. It's often the quiet, the patient investor who ends up with the real treasures out there, not typically the ones digging in the dirt. So be careful out there. The cracks are getting bigger. That's the bottom line here. The bottom line, all trading involves a substantial risk of loss. Past performance, not necessarily indicative of future results. This presentation here intended to be informational, educational, fun, entertaining, not a recommendation to be buying or selling any financial instrument, including stocks, options, bonds, forex, futures, cryptos, treasuries. If you trade them, you might lose them money. I mean, I make predictions. I have a bag of unicorn dust. Throw it around here. Got a bag of unicorn dust. You know, it does what it does, but it's not a crystal ball. It's not a magic wand. It doesn't predict the markets with any kind of certainty. So if you desire personal financial advice, hire and consult a financial advisor. It's not what I do. Don't pretend to be one on YouTube or anywhere else. Don't ask me, what should I do with this trade? I'm not going to tell you, because you got to own your own trade. I mean, that's the bottom line here. Here we are, the second week of November. Government shutdown potentially getting worked out. We'll see. Tomorrow, Veterans Day. Thank you all to the veterans in the chat. I know Lieutenant Colonel Goose is in here. I see Frank's in here. I see Sledge, Captain Sledge. I'm sure General Rush hanging around somewhere. I'm sure some of you haven't told me you were retired military. So thanks for all you've done. Tomorrow, Veterans Day. And there we are. Just kind of humming along still. Still in a government shutdown for now. We might be able to get some CPI, PPI coming out, maybe. What's it do when we get a big deluge of government reports for the last month and a half when the government reopens? I don't know. Is it a good thing? Is it a bad thing? I'm not sure. So here we are on, what, day 41, I think it is now? Day 40. So we make it to the 12th at 10 a.m. That'll be more than 42 days. Looks like a 91% chance that happens. Now, even though they've got this vote, so here in a few minutes, that one will be, nope, we didn't reopen. This one tomorrow at 11, or at 10 a.m., 11:11, likely. So they did this vote, but they still have to do like 3 more votes in the Senate, and then it has to go back to the House, and they have to vote on it. And even though it was like a preliminary deal, they have to attach 3 bills to it, like what they call a 3-bill minibus. Then they have to do a continuing resolution, and there's nothing simple about this. All right, they've got a bunch of bullshit, and the whole thing is only going to last till the 30th of January, and then we shut back down again if they don't get their crap together, which I don't have high hopes for them getting any crap together. They were going to fund SNAP through the end of fiscal year 2026. So those among us on food stamps, which don't trade with money, if you're using food stamps for anything, don't trade with real money. I don't know. We'll see what happens, I guess. What was that question? Will there be a party for the Pope or something like that? What a crazy question. Anyway. I don't even see the... When will the government shutdown end? Predicted November 14th. Looks like That one's gaining popularity right there. Interesting thing I saw. So for these binary outcomes, this one's not really binary. It has lots of different options to it. For the ones that do have a binary outcome, like, will the Fed cut rates? Yes or no? It's interesting that you can come in here. Usually you can bet yes on call sheet and no on Polymarket, and you win either way. Because between the yes and the no, you actually end up making like 2 or 3 pennies per dollar bet. Maybe more than that, depending on the particular one. It's kind of crazy. And you got to be careful. Like, you got to go look at which one's paying higher on yes and which one's paying higher on no, and go bet that way. And essentially you can arbitrage and always win. It's the craziest freaking thing. Of course, be careful on fees and whatnot, but I've noticed this when there's a particular outcome that's binary, like a yes or no. There's no other fuzziness to it. Now, you got to be careful. The questions are usually slightly different on both platforms, but I thought it was very interesting that the payout for no and the payout for yes, when added together, is usually well over $1. If you bet equally on both outcomes, net effect, you win every time. I'm sure that won't last for long, but it works right now. Works right now. So we're getting a little bit of rally this morning on this potential good news. We may reopen. Look at that. We dipped down into the danger zone. Let's see, I guess this is the chart where I drew it. I was like, where is my drawing? Here it is. Look at that. I mean, you can't get more of a perfect hit than that. Look at that. Look at that. I drew this potential path when we were back here. If you nailed that, if you were bold enough to actually take the trades, congratulations. Next stop, probably right up here near 7,000. We might actually poke through 7,000 before we go below 4. I didn't really see that as possible early in the year. But when we do this, the next stop is much lower. Be careful out there, everybody. We're probably going to do some sort of crazy move like this, maybe up into the 71, 72. And then we're going to pay the piper. So be careful. We were already, this happened at like noon on Friday. So it wasn't like this was right at the end of the day or anything. This happened like right around noon, and then we've been recovering back out of here. Now, there will probably be some sort of pullback. If I had my guess, let's clean it up and look where we might pull back. So we either get a reaction right here, or we might get one right up here, or we might get one right here. I don't have a high degree of confidence because this price structure is gross and nasty and dangerous. Like, this is an unpredictable price pattern, even though I got that right on the freaking money right there. Can't even believe that. Golly, right in the middle of the target. So highly likely we get another one of these big moves where we come up in this zone, pull back, and then push it on out to the target. Just unclear on exactly where that happens. So we got, and this one started out over here really rough. Right there. This one was 3-wave 2, also 3-wave with a 3-wave. That was 3-wavy. So we'll probably do some sort of move up, retrace, and extension. Let's see if we can make any kind of wild guess off of this. Yeah, so that might be where we top out, right in here. Then we do a little pullback, and then we go on up. Be my educated wild guess on this. Let's make a wild guess that we might top out up here. Once we get above here, yikes. Once we get above that is the yikes level. Now, the other yikes level, if we break down below here, is another yikes level. Put a level in here. There we go. That's what these are the two levels we're concerned about right here. Here and down here. Get below here, that means we're going down nasty. Get up here, it means we now satisfy the conditions for doing this. What's the bullish positive outcome? Unfortunately, there's not really a rosy picture bullish potential outcome at this point. We're probably going to do a bigger correction. The targets for that. First level right down here around the daily charts. Next level down, 3-day charts. Next level down, this is where it gets nasty. Weekly charts, which isn't far below the 3-day chart. And then the really crazy one, the monthly chart. And if we get below that, well, we're going down here to retest this breakout. You can not believe me all you want, but those are the levels. So we break down and break down. That's what we can see. Looking at the NASDAQ. Huh. Almost a perfect hit. Didn't quite get that high, but that was almost perfect. Almost perfect. Next up, let's see what we got. Yeah, we didn't do that. This is still the upside target right here. 27,000 on NASDAQ. Probably do some sort of 3-wave thing like that to get there. Whether it's going fast or it takes us a little longer. The bad news is probably going to have a down December at this point if we get up here by Thanksgiving. Holy bananas. Look at this. Holy sugar, honey, iced tea. I tried to get put that at 15. I tried hard to get put that at 15. They would not put me that stock. Dang. That was another Rocket Lab setup right there. Bounced. I was trying to get it put to me. Missed it now. Can this go bananas crazy? Sure. It's probably going to complete some sort of 5 up, retrace, and then go even further up. Crazy. Crazy, crazy, crazy. All right, everybody. Let's look for some opportunities. Oil. So far, holding on to this potential head and shoulders thing. We may come, this may rally back up a little bit and then fail out. I still believe we're going to fail this thing, not carry it out. Gold coming back up to the danger level. Watch out right here. Unlikely that we're done. Although if we rally up there and we come down and just make a lower low, it's possible that we find a bottom in here and take this back higher. That is possible. Bitcoin. We're up to the first resistance. If we can break through it, next one up, the next one up, and we get above this, we're probably going to new all-time highs. I've seen so many people saying that this time's different. There's no 4-year cycle. There's no blah, 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 blah. How do you know? Where's the proof? We have no proof that this time is different at this point. Although, check it out. Bitcoin has essentially gone nowhere. For almost a whole year. 11 months of going pretty much nowhere. Try to break down, try to break out, pretty much gone nowhere for 11 months. It's not exactly the biggest, highest conviction trending thing out there when it's gone nowhere for 11 months. Ethereum, Ether coming back up, testing the roadmap line. If we get back below this low, we're probably coming down to 25, 26, 24.50 to 26.50, somewhere in that zone. If we fail below the low, probably coming down right down here. Put our target on there. If we can get back through this downtrend of highs, the target to the upside, still up here. Didn't do it back here. We couldn't break out. We fell back down lower. That was the warning sign. Now we're coming up to the roadmap line. Not getting through it is the next warning sign. Finding resistance, turning down like we are so far today. This will be the next warning sign that that's going to happen. NKD, potentially turning around here a little bit. Next big upside target. We do have a little resistance here at 53,000, but then could take it all the way up to 60. How about that? Of course, it can stop and fail at any point, but that would be the next ideal upside. Dollars back to testing the roadmap line. If we hold it, break back above here. 102 is the next test. And if we get through it, things can get really spicy to the upside on the dollar. Bunch of shorts are going to start stopping out. Apple coming back up. Watch that 618 retrace on that drop. Right at it. We can get through it. Probably going on up. Maybe to 285. Amazon. Same. Watch that 618 resistance zone. That can lead to further downside. Google. This is probably going to pop on up, hit the 304. I don't think we're stopping at the 618 based on that price action. Meta's almost down there. Be a shame to come all this way and just stop at 606 when we could hit 508. I mean 580. 580. It would look this doing this right here, despite all the borrowing and increased bond costs, could set this one up for a massive upside. Talking about 1300 up here. It's pretty much a double again. You know, I said back here, I said Meta's probably good for a double. Got darn close. Now we're sitting here. If Meta does this, we're looking at a potential double from up here. That could be pretty spicy. Microsoft coming up just a little shy of the targets. Come on, baby. This needs to go just a little bit lower. Got to go lower than that low right over here to clean this up. Provide clarity what's up next. Now, resistance right there at the roadmap line. Ideal. Hit here. And if things don't hold there, down here. NVIDIA. So watch for the 618 retrace right there. Tesla. Starting to look a little soft here. That is potentially 3 down. Just, it's really hard to see, I guess. 1, 2, 3, but that only has 3 in the 3. Unclear. It's like mucked this up really good, so. Unclear. Netflix coming back up for the hourly roadmap test and the daily roadmap test. All the roadmap lines seem to be sitting right about the same place here. So look best with one more drop, and it may wait till the split to do that drop. Splits have not been the most bullish lately. The traditional think is that if you split your stock, then more people can afford it and it goes higher again. But it seems to be some kind of psychological thing when the stock drops from 1100 down to 110 that traders don't want to mess with this anymore because it's, you know, because it took a big drop. And you're seeing the same thing play out on reverse splits. It attracts people. I guess that's why so many of you request these tickers on Tuesdays that are reverse splitting when you go from like 50 cents to, and you split it by like 50 and it jumps to 25 bucks. And then everybody's like, oh my gosh, it just went from 50 cents to just jumped from 50 cents to 25 bucks. And that must be, you know, rocket time. No, bad thought. And over here, bad thought. Like it has nothing to do with the market cap of the company didn't change. Like the value of the company didn't change. So market cap, it's not going to change when they do the split. 10 for 1. Share price has nothing to do with comparing it to other companies and its value. Now, share price times the number of shares is the value. So share price times the number of shares available. So what they're going to do is they're going to 10 times the number of shares available and cut the price by 10. So divide this price by 10. But at the same time, they're going to multiply the number of shares available by 10. CLS was the top mover this morning. It's just sitting here at the resistance. Probably needs a pullback. Lots of stuff needs to finish the pullback. Some stuff got dang close. Let's see. Strategy. You'll notice they changed their logo to Bitcoin. I thought that was funny. So this potentially made the lower low and finished up this correction. I'll have to watch this. If it goes rallying up, can bust through the roadmap line. This could set up to go on up to new all-time high. Could just be one big correction from back here. You know, basically the year that Bitcoin's gone nowhere, this is just bled down. Bitcoin's gone nowhere and strategy has gone nowhere. So this could be an indicator that we're going ripping higher. We'll see. We shall see. STX coming back up, new all-time high. Craziness. AVGO just sitting there. BRT sitting there. AMD. As long as we held that breakout price at 228, activates this bigger upside right here. I'll probably have resistance here at 300. If we can get on through, that's 450. GLD coming up a little bit. Be careful. CIEN, new all-time high. Let's take a look at stuff set up for action today. Shopify coming on. That'd be great to come on down. There's a lot of bullish stuff. We can circle back and touch a few more of these. Decliners. Ouch. Monday not having a good Monday right there. Whew. Ideal support right down here at 130. I wonder how many people are confused about this, like messing up the tickers here. MTSR. Humana coming on down. If we can hold that, if we make it just a lower low and hold, that'd be pretty potential. That'd be a nice potential bullish setup right there to launch off up here. Cigna, UNH. Yeah, UNH needs to come down. Right down in here. All right. So these setups right here, these are my market roadmap bounce. If you're not familiar with the market roadmap, links in the description. It's the video pinned to my homepage. I explain the pattern, I'll give you the freaking indicator for free. At least the code for it. If you need an easy button to put it on your chart, $5. There's the target up there. Let's look at the statistics for this. 45.80, 1.4. That's pretty smoking. This has got a long history of doing a trend pullback continuation pattern, and 80% of the time it works out, and you get a profit factor of 1.4. So 80% of the time, this is going to get the continuation. There's your target. Where's your stop? Dollar below the low. 127.63. BLX. Can't be the right one. It's got to be this one. Here's the high. Here's the low. There's the potential entry. And target 499. 49.99. Right up there. 29.79, 1.5. I mean, this. So one trade here isn't going to bust this and make it lower than 75. So this more than likely works out more often. You know, this is probably going to be the 80th. To push it up to 80 percentile. So pretty good right there. Cade. Yeah, I got some good ones on here today. Got some good ones. 4098, 30. That's a good one. CCEP. Charlie Echo Papa. 94 target. CLAR. This one fired off back here and couldn't break out. This is why I don't necessarily like when the roadmap line is in a downtrend. Doesn't feel like this broke above and back tested. It was it did get above. It did technically set up the pattern, but you can see it's not getting the continuation as we have downward pressure on this stock. This did set up another potential entry here. This one right here with a 418 target. Another thing going against this, if they're under 20 bucks, they don't have institutional support. It's low price stuff. I call it low price stuff and not my favorite. 15 trades, not a statistical population, but it does have some winning history here in the 15 trades it's done. 30 trades is a statistical population, 15 is not. And 3306, potential upside. 8. Yeah, those numbers don't mean much. EMLP. It's had a pretty solid top on it right here. So but the bottoms just keeps coming up higher and higher. It's in the trade from back here. Looking for that breakout. 35 or 38.84 would be this target, and the one back here, much bigger swing, high to low, 39. So not crazy higher, but higher nonetheless. FNB. The algorithm will not double enter, so 1730. FSBW. Like I said, it's in it from back there. Set up another entry right here. 43.84. H. Here's the high, here's the low, there's the entry, and 160.17 target. Not far away. Risk rewards kind of skewed on that one a little bit, but 20 trades, 80%, 2.6. Not bad numbers. HLT. Hilton Worldwide. What we got? That's Hyatt. This is Hilton. So this one entered back here, stopped out right here, dollar below the low. And we get another entry right on the back of that stop out. Come on now. Freaking alerts, man. $283.70. IXC. Here's the high, here's the low, there's the entry, 43.77. Not bad. It's not above 70 on the win rate. They didn't have more than 30 trades. This one, 22 on the target. Statistics don't matter on that one. KIE. Here's the high, here's the low, there's the entry, 61.17. This is in it from all the way back here. It's not really been trending. It's just been sitting for well over a year. So you got to decide if this is something you want to get involved in or not. 63.88. Be the upside target on the bigger pattern there. Smaller pattern, 61. So this one can play out inside this one. It's typical. Lamar Advertising kicked off back here. 132 target. Secondary entry, that high, this low. Kicks off with a 131 target. NRC. And it's another one of those downtrending ones that just stopped out here. This may stop out again too. 1736 would be the target. Yeah. Not a big fan of that one. Let's see, Brasileiro. This has got a downtrend, but it worked out last time. Stopped out the time before that. Here's the entry, 1380 target, and just kind of fair numbers, I guess. PBRA, that one worked out last time. Stopped out the time before that, just like PBR. They're Class A shares, I'm sure. And potential 1255 on that one. PGNY, last time it worked out. Spiked up here, got to move down here. Here's the entry, and 2778 target. Does not have a statistical history that we can count on. Choppy garbage here, be careful. Man, that's hard to... Yeah, be careful. That's a tight range with not much move. It can stop out again. But 2669 would be the entry, or the target. THG. Drawings. Got the high, we got the low. 189.54. 38. Check plus. 60 is light. And then 1 is light. So this one's not a great one, but... And that one kicked off a few days ago on potential. Did not trigger my algorithm because it's in it from back here. So there you go, that one. 81, and it works out before this one works out back here. That's going to be even higher. Vet. In it from back here. Got another little bounce. Sets the target still at 890 basically. WAFD, here's the high, here's the low. Entry, target 33.55. West is the wrong West, it pulled up. Need the New York Stock Exchange version. Potential right there, 40.37. And last but not least is you. 40.37. New stock, doesn't have a history. Be careful out there on that one, on those. Let's see, anything sparks my interest here. Sezzle. If Sezzle can hold right here, this 54 area, sets that up for a bigger upside move. Potentially some ridiculous numbers. Celsius, if we can turn this here, and maybe all the retrace we needed. Get back up through that 618, set this up for the bigger breakout potential. And my bias for the day, for those of you still hanging around, cautiously optimistic on the upside, at least for now. Probably get a bigger retrace here somewhere, but we can take this on up. Now I'm guessing we might top out around 69.22. It's about 100 points higher. Then we'll probably pull back about 100 points, and then we'll probably go higher from there. So this is my kind of my primary expectation is this move right here. We'll see. Have a great day. I'll be on Market Masters at 11:30. I'll be back tomorrow, same bat time, same bat channel, 9:15 tomorrow morning. We'll hunt for opportunities again. Have a great day out there. Be safe. Be careful. The account you save may be your own. See you later. Bye.